Let's move to our currency of the week, pound dollar. Brexit is coming, it's running through Parliament, and it hurts the pound. So, three factors here. Dollar strength pushes pound dollar lower. Brexit issues and Brexit finally biting, finally hurting the economy. Something that has been delayed, but unfortunately it's coming. So let's run quickly about US dollar strength. The rate hike is coming in March, bearing a disaster. We talked about that in detail. Trump gave one normal speech. Well, that was so last week. Since then, he had his crazy tweets on Saturday, but it does, when he does provide something more normal, more presidential, it does help the US dollar. And there's a bit of a risk off touch, which also helps the US dollar. But in the pound dollar segment, I want to focus more on the pound. We have a back and forth between the House of Lords, the unelected lords, including some former prime ministers, including other elderly members. They intervene a bit in the process. So they made some amendments to the Brexit Bill, the very simple Brexit Bill that passed the House of Commons, and sent it back to the House of Commons. Most probably, House of Commons, the elected members of Parliament, will annul this, but it causes problems because, first of all, it puts some the spotlight on the issue of EU citizens living in the UK. Okay, so many people who don't know about their future, so it's quite worrying. It shows that the government has less power, that it's not fully in control. Okay, so it's a bit worrying for well, people that thought that Brexit will be a relatively smooth process, or at least, well, remember, Theresa May has an absolute majority in Parliament, but certainly doesn't. It's a bit messy anyway. Has a bit less power, and many doubt that the government has any plan, that the previous government, led by David Cameron, had any plan, and that, well, that's not new, but things look a bit messy regarding Brexit. Okay, and the third issue here is that Brexit begins biting. Okay, retail sales fell in December, the month of shopping, and in January. And we still don't have the official numbers for February, but the British Retail Consortium, BRC, showed that a year-over-year drop in same store, like-for-like stores. Okay, so that's another worrying thing. People are buying more essentials, according to the BRC and according to a Barclay survey. More essentials like food, less non-essentials. Prices are higher because of a weaker pound, and this limits consumption of other goods. So that's a point of worry in the UK economy. What's next for pound dollar? Next week we have the jobs report. Watch out for jobless claims. Last time they were the methodology was changed, so we had a big drop. But this time we could see these rising, and this could be a source of worry. If they fall, of course, it's good news for the pound. Real wages, are they slowing? Is inflation hurting wages? Maybe nominal wages are the same, or well, continue growing in the same pace. But real wages, are they slowing down? Are they falling? These are the two things to watch out for. But it could also be a good report. So that's, I think, Wednesday next week. And there's a rate decision next week. It's not the most important decision. It's not a super Thursday. There's no quarterly inflation report. But of course, every meeting by the Bank of England, by Mark Carney, is an important meeting. The meeting minutes are released alongside the decision. There's no change expected to interest rates, but it could reveal, the meeting minutes could reveal worries about a weak pound, how it's hurting the economy. So that's another thing to look out for. Conclusion, the pound is under pressure. We're seeing it this week. Of course, not only US dollar strength, Brexit, I believe, is worse than Trump. Okay, it's a much bigger change. So if, and of course, Trump is so far, despite the wobbles since the elections in November, it's positive for the US dollar. Anyway, Brexit could begin biting, and we should watch economic data more closely. Less politics, more data regarding the pound. Okay, let's conclude this segment with a look at the charts. Let's zoom out to the daily chart, talk about what we're seeing here. So this is the big picture. Here we are in June 2016, 150. Boom, comes the euro referendum. We traded at a range between around 128 to 135. Then we had the second downfall in the autumn, in the fall. In October, the flash crash sent us below 120, and we had a range here of, 120 to 128 almost. And if we zoom in to recent weeks, this is the daily chart. We're seeing a downfall back from the mid, 124 level, more or less, closer. Now we're closer to 120. Big lines to watch here in pound dollar. 120, 120 is the next line of support, worked as such in January. The next level is the round number of 120, or if you look at the real swing low of early January, it was 1.1985. 1985 symbolically is the year we traded at such low levels. Below 120, it's, again, levels last seen 32 years ago. To the upside, we have 122, 123, and 123.50. Anyway, things are looking a bit worse for the pound. I think that if we fall too much, it could hurt the UK economy because it pushes inflation higher. So the Bank of England could say we're watching out for the falling pound. They will not raise rates, but they might try to talk up the pound. Very different from other economies, from other countries. Okay.